Welcome back. Well, 'tis the season of giving. A lot of us feeling the kind spirit and donating to charities this time of year. But this year, there are some financial changes you should keep in mind. And joining me to cover all of that this morning, Brad Zucker with Safe Money Advisors. Good morning, Brad.
Great to be here. Thank you very much.
Yeah, so a lot of us, well, first of all, a lot of us don't even really think about this. You know, we're just in the holiday spirit. We give. We don't even think to maybe write it off. But if you do, though, there's some changes, right?
Yeah, getting a tax deduction is a great incentive for people to give to charities. But in order to get the deduction, you have to itemize on your taxes. And the number of people that are expected to itemize is going to drop dramatically this year because of the tax changes. From 46 million people to about 18 million will actually itemize. And that's because most of the households will already claim this charitable contribution.
And for people that don't understand how that works, when you itemize, right, it's you have to write things off, but you have to reach a certain amount. But a lot of people are not going to reach that amount.
Exactly. The new tax law change increased standard deductions for a married couple from $12,700 to about $24,000. So again, most people will already include those donations as part of their deductions. But there are strategies that we can use today that can help even if you can't itemize.
And there's 3 of them, right? We were just talking about.
That is correct, yeah.
Bunching is number 1. So what does bunching mean?
So bunching, instead of giving to a charity every year, you can save your donation and you can double up every other year. So if you were to start bunching this holiday season, you would take your standard deductions for 2018 and next year you get to itemize. Now, bunching may or may not work depending on how much you plan to donate and how close you are to having enough deductions exceed the threshold of standard deductions.
And so some other tips as well?
Yes, something called donor advised funds. These are really gaining in popularity. They've nearly doubled in size since 2012. With donor advised funds, you can contribute cash, stocks, bonds, even Bitcoin and personal items like jewelry. It's invested, it grows tax-free until you choose to donate it to a qualified charity. But to look out for, hey, are there any minimums that have to be set up? And do you have to make further donations, subsequent donations? And keep an eye on the fees charged against those accounts.
Cool. And then required minimum, what does that mean?
Well, if you've got an IRA and you're a retiree, you've got a gift from the government. You can use your required minimum distributions and give it to others, because if you're over age 70 and a half, you've got to take those required distributions after you turn 70 and a half from a 401k or IRA before the year's end, and you could have that money transferred right from the IRA directly to a qualified charity. So identify how much you need to withdraw and your deadline, and make charitable giving part of your retirement without compromising your lifestyle, because retirees are afraid of outliving their money. It's their biggest concern. And at Safe Money Advisors, I work with clients so that we can create income plans that include charitable giving.
All right, good advice as always, especially for the holidays.
Yes.
You know, a lot of people giving, and certainly good advice. Brad Zucker, helpful as always.
Thank you very much.
Being here. All
Great
right,
to be here.
We'll see you after the break.
Thank you.